Hello, thank you. Welcome to Unleashing Usage-Based Pricing to Drive Growth, Customer Satisfaction, and Retention, presented to you today by BluLogix with MGI as our featured speaker. Today we're going to be talking about the whys, hows, and the roadmap for creating a robust usage-based pricing model and being able to implement it based on the whys of why you need to be doing this. I'm going to apologize in advance. GoToMeeting is having some technical difficulties today, so we're going to work through this to the best of our abilities, but we do promise that we will re-record this and send it out in a better version. The problems that we're seeing right now are related to slides progressing and the slides that are being presented to you. So please feel free to raise your hand with questions and to present questions as we go, and we'll do our best to answer them as we go along here. So today, the agenda is we're going to walk through the whys of why you want to move to usage-based billing, the market conditions in the economy, some evolving business models, issues around funding, moving into this space, and really the agility in allowing you to adapt to pricing opportunities, as well as obviously the big product-led growth challenge. The hows, really, we're going to focus with Yusuf Yagmor, the CEO of BluLogix, talking about data integration, rating and mediation, end-to-end process and automation, and revenue and financial management. Our speakers today are Andrew Daly, the co-founder and managing director at MGI Research, Igor Stenmark, again, co-founder and managing partner at MGI Research, and Yusuf Yagmor, the CEO and co-founder of BluLogix. So getting started, I'm going to hand this over to Igor to talk about the whys of usage-based pricing.
Thank you, Inga. Hi, everyone. This is Igor Stenmark at MGI Research. I want to thank BluLogix for hosting us here today. I'm going to try to give you just a brief introduction as how we see the modern sort of definition of what usage billing is all about, why it's important, and whatever practical approaches to implementing usage billing. So I'll start with just a brief introduction here. Okay, can you guys see my screen?
We can see your screen, Igor.
Okay, terrific. So for those of you who may not be familiar with our firm, I'll do a brief 30-second introduction. We're an independent industry research and advisory firm. We are focused on disruption in tech, specifically more in enterprise software. Even more specifically, we target the area of monetization, and that's kind of a whole area of capability that deals with transforming opportunities into cash and revenue. We work with technology buyers, technology suppliers, and institutional investors in this space, and in the course of a typical year, we speak to hundreds and hundreds of companies in a variety of contexts. So what are some of the key issues that really define or frame the discussion on the usage billing? First of all, what is it? There are many very conflicting definitions of what it is. Some people think it's new. Some people think it's really old wine in new bottles, and it's really old stuff. Who is right? What's really driving the interest in consumption pricing models? Is it something that's driven by this new investment that's coming into the space, or are there organic trends that really develop with tailwinds for adoption, increased adoption of consumption-based pricing? What are the challenges in implementing usage billing? And what can you do to effectively adapt it, and how do you build a business case for starting to offer usage billing? So let's start with just basic, very simple definition. In usage billing context, customers are charged based on what they consume. So it's a per use based pricing model that allows companies to kind of align what the customer interest may be with the way the customers are being charged with actual consumption. So if there's no consumption, there's no charge, and if there is consumption, there is a monetary exchange. Usage is typically measured in terms of something specific, a specific metric, could be number of users, number of transactions, amount of data that's being stored. It could be any kind of a metric that's measurable in a kind of a non-controversial manner. People often kind of compare and contrast usage billing against subscription. Usage billing is not the opposite of subscriptions. Subscription is a relationship that companies have with their customers, and within confines of a subscription relationship, you can have a fixed recurring charge, a one-time charge, you can have a usage charge. So subscription is really the overall umbrella for building a relationship, and usage billing is a pricing modality that exists within that. In order to deploy a successful consumption-based pricing model, you need to have a billing solution that really is capable of doing it, that can really take the raw data that you have about specific usage and convert that into invoices, account updates, and analytics. So what are some of the examples today, common examples of usage billing? It's widely used in telecom industry, in cloud infrastructure, AWS, Microsoft, Google Cloud, all utilize usage billing. In the telecom world, this has been the mainstay of the business for the past 50 years. Utilities, the same thing. In the software industry, in recent years, there's been an increasing reliance on usage billing. There are many well-known companies like Snowflake and quite a few others that really are relying on usage billing for the core of their business model. So it's really moving more so into the mainstream, away from just being the domain of utilities and telecom companies. And we see many companies trying to figure out ways to monetize things that they haven't previously been able to do so with, like monetizing data, storage, API calls, any kind of measurable events and outcomes. So it's really moving into a mainstream. And we've seen more funding coming into this space. So what are some of the tailwinds? Why is this happening? What's driving this demand, perceived demand for consumption-based pricing? So as I mentioned before, part of the reason is customers see it as a more equitable approach to providing a value exchange. If I don't use something, I don't pay for it. If I use it, I pay for it. That seems to be fair. It creates, in many cases, because of that, a much more frictionless on-ramp kind of engagement to get the customers to say, well, I don't have to pay a large upfront fee or a fixed charge every month. If I try it and use it, if I like it, then we can have a more detailed conversation. So it's a more fair, or seems to be a more fair, as I said, price equitable approach, and with a lower product adoption hurdle. So it's also an opportunity in many ways for vendors, as I said, to really capture value that previously may have been just given away. Also, the economy itself being as uncertain as it is, really incents many companies to look at usage billing, and many vendors look at usage billing as a way to hedge risk. In one situation, companies will say, look, if I have a fixed charge every month for every user, I might actually trim the number of seats and trim the involvement of a product. But with usage-based pricing, they can keep engaged and then only pay for what we actually use, perhaps at a higher price, but still it may be a lower overall bill. We see that there are many of these new companies that are involved with generative AI that are really very, very interested in consumption-based pricing and beginning to adopt it en masse. And to a large extent, that will drive interest in tools that support usage-based billing. If I would say 10, 15 years ago, usage billing was perceived as something very complex. Very few software companies were offering that as an option. Very few tools supported that. But now there's been a lot more companies coming to a fold that really are able to provide tooling for that. And in a sense, that opens up a whole new market. Think seed stage, Series A, Series B companies, venture backed, that previously would not have thought about using usage billing, but now find it to be essentially a mainstream opportunity. So we are often asked, how big is the market for usage billing? And we have a pretty extensive effort to track market sizing and develop very detailed forecasts. And we always emphasize that usage billing is not a separate market. It's a feature, it's a capability within the existing agile billing marketplace. So what are some of the characteristics of usage billing that one needs to be really familiar with? Well, let's start with some real basics. So there's really two major flavors of usage billing. There's a postpaid and a prepaid. So postpaid, customers get in, they sign up, maybe provide a credit card, maybe not, or some other form of payment. They will go in and start using it, and then at the end of a billing cycle, they'll get a bill. And oftentimes this involves some level of pre-authorization or a credit check, because obviously you're not gonna give if you're renting cars and you have Porsches on your lot, you're not gonna give somebody a Porsche 911 and say, go test drive it for a few days and tell me what you think, and I'll charge you by the mile, and they come back with 10,000 miles in the car. So there's some control, some pre-authorization to contain that. In B2B context, what usually involves some credit checking and underwriting process. In a prepaid context, customers establish an account, they load up a charge, sort of the way you would load up a prepaid SIM card for phone service, and then use it. And then if you overuse it, you either can fill it up again, or in a B2B context, there's this concept of a true up there at the end of a billing cycle or at the end of a subscription agreement. There's a process of evening it up and adding additional money or renegotiating the deal. It goes, billing in general can go from very simple to very complex, and I think usage billing is no exception. We find that, having just completed a very extensive research and rating process on the top 50 vendors in this space, lots of vendors can support very basic use case for usage billing, but as it progresses, it becomes more sophisticated, more complex. That field narrows pretty quickly. So some of the examples that kind of can add complexity to usage billing, there's this concept of minimum spend, where you have to measure the spend and the usage and really ensure that even if the user does not use up their allowance, that the proper billing is established. Tiered pricing, just like in fixed recurring charges, there's ability to tier prices based on and tier the charges based on either a progressive view, meaning every time you exceed a certain threshold, you get charged a different amount, a different rate above that threshold, or it can be retroactive, where you hit a certain volume and you can be charged for everything at a lower rate typically. There's this concept of rating, which takes into account many external variables. Is it peak period or off peak? Is the charge taking place in one geography or another, and prices could be different. So it can get fairly sophisticated quickly. Volume purchasing agreements, this applies both in B2C and B2B context. In the B2C context, think of it as a family plan. In a B2B context, it could be a company with many divisions and distributors, and we want to secure master pricing for everything and measure volume. And then there's lots and lots of combinations where people use both fixed and usage-based, consumption-based plans. So simplistically, think about having a usage plan for your cellular service, which gives you certain allowance of minutes and data, but then there's an option to convert to a no limit plan, which would be a much higher charge, fixed charge, but would not incur charges. All of those require, even if you never use consumption-based pricing in your product strategy, just having a ability to measure usage is extremely valuable. And it's valuable because it kind of tells you, is there actual usage, is there actual engagement, or lack thereof? And if there isn't engagement, that could be a troubling sign that you need to address. So as I mentioned, this area follows a pretty wide spectrum of complexity. You can start with something very simple. You could be in a situation where you do something basic and you get a file of usage once a month. Everybody has the same format. You load it up, and even a simple billing product in many cases can do a job. And it can progress very quickly into you having multiple incompatible data sources. You have to do it in very quick time as opposed to in batch or in real time, or you have multiple real-time data sources, and you have tiered pricing on top of that, and you have volume purchasing agreements that force you to reprice things and recalculate in real time. So it can go from very, very basic to very complex in a very quick time. And then there are very complex use cases for usage billing, multiple usage metrics, which gives you a lot of flexibility, but also you have to really build for that and be cognizant of the fact that it can multiply the complexity, not linearly and not even exponentially, but geometrically. And so really, you need to think about, do I need a mediation tool? I'll talk about this in a second. How does my billing going to synchronize with my accounting, and how do I kind of account for revenue? What happens when changes take place and I have to retroactively recalculate charges, and so on and so on. So it also requires, this kinds of cases also typically require much more sophistication when it comes to how you invoice and how do you provide data to customers, typically in some sort of a self-service portal. Customers in that case oftentimes want to be able to see what specific charges were incurred at what point in time. There's this built-in kind of default understanding that there's a way to go back and audit every invoice and every charge and every invoice down to its individual call record or usage record, and that can get fairly complex. So connected to usage billing is this concept of mediation, and it's not a legal term, to be sure. It's a process of really taking data from various sources and mediating it, transforming it into a format that creates a so-called golden record that allows the billing systems to function properly, because you can get data from different places in different time zones, different formats, different syntax, different semantics. So all that has to be translated into a kind of a homogeneous set of data that can be used then for precise billing. And then there's also situations where you have too much data, so you have to consolidate. In some cases, you're going to have data that's defective. There are errors, or there's missing data. In many cases, you need to enrich the data with additional attributes before it goes into a billing system. And you have to be able to do it at very high speed, oftentimes in real time. So this is very different from, say, if you're using an ETL tool and you're trying to load up data once a month and do it kind of in a controlled, almost like a lab fashion. This has to happen in flight immediately. And you have to be able to go back and show due diligence and really identify all of the data which you used in the calculation of an invoice. So that also requires specialized tools. So as you select a solution, a billing software solution for consumption-based pricing, you need to ask yourself a question: do I need to also address those requirements? And therefore, do I need to have a mediation capability? And is that part of a solution I'm buying, or is that something I license externally or build, or what should be my strategy here? So what are some of the challenges? I've been hinting all along, but this is not a simple endeavor. It can be simple, and probably many cases can be handled very quickly. But overall, you have to be cognizant of the complexities involved and challenges involved. The complexity itself is an obstacle. You'll need skilled resources, people, hopefully people that are experienced in having done this before. That's ideal, whether it's internal or you use a service provider that has expertise of that and can demonstrate for references they've done it. There's this just basic business lack of predictabilities. Customers like consumption-based pricing, but up to a point, because ultimately, in many cases, what they want is predictability. So they will start with usage billing and then say, look, I really want to switch to a fixed pricing mechanism. Maybe I'll give you a lot of money up front every year, and in exchange, you won't charge me for every usage record I generate. Data management and data hygiene are complex challenges here as well. Ability to scale and get performance. Let's say if you have to process, 300-400 million records per minute, or in some cases per second, how are you going to do it? How much storage is required? Do you have the core skills to handle something like that? And then being able to handle audit confidently and answer very complex questions that may come across where people will try to question some of the invoices and engage in billing disputes. What does a roadmap look like? What do you have to do? This is not meant to be a comprehensive roadmap. This is just conceptual in nature. Number one, figure out what your requirements are going to be, not only now, but what does it look like, say, 36, 48 months ahead? And what's going to shape those requirements? What does a competitive landscape look like? What's your competition doing? Are they introducing new methods of pricing? Are we going to go for dynamic pricing? Are we going to go for outcome-based pricing on top of usage? And what capabilities you're going to require for that? Storage, real-time capabilities, metering, rating, advanced invoicing. Build a plan, make sure it's realistic, get a budget. It also doesn't leave you dry in the middle of a project, and have a backup and go in maneuvers and test it out. And then as soon as you start testing it out, we generally, if you have a simple case involving usage billing, you can probably get this going fairly quickly, talking about weeks, if not, mostly months, maybe at the most. But anything medium complexity and above, you should be planning on running this for sometime between 3 to 6 months before you confidently can demonstrate integrity of a process, data is clean, that invoice disputes are going to be held to a minimum, and so on. Anyway, that's our story. I'm going to hand this over back to, I think, to Yusuf at this point.
I think you're going to hand it back over to me for now.
Okay, sounds good.
All right. And I'm going to show my screen, and apologies if we have the lag right now. So the hows of usage-based pricing. So today we're going to talk a little bit more. Yusuf is going to help us with the hows of usage-based pricing, really specifically around 5 key areas. Number one is PLG. It's really looking at harnessing complex pricing to boost your product-led growth and your customer satisfaction, all while reducing churn. The second really is around the service offering. The service offering, really understanding what your service offering is, that you can base a really robust usage-based pricing capability off of, understanding how that service offering, works with the usage-based pricing. The third really is around automation. One of the key components of usage-based pricing is automating really the end-to-end process to make sure you can scale your business and optimize efficiently, optimize your efficiency and increase profitability. Fourth is integration, really looking at how you integrate with your external systems, your internal systems, to, as Igor referred to with the data, make sure that you're synchronizing your data and aligning your reporting across your entire ecosystem. And then lastly, we'll talk a little bit about the financials. The financials really focusing on revenue management and profitability around a couple of the key items, which are revenue recognition, as well as margin analysis, and how you can automate some of that margin analyzer. So, Yusuf, I'm going to hand it over to you. Understanding flexibility to simplify complexity.
Thank you. Thank you, Inga. I am turning my camera on. There we go. I appreciate that. Thank you for the intro. And Igor, thank you for the points that you've covered. I'm going to pick up from where you left it with the subscription versus the usage-based or consumption-based billing. It's not really either or. Let me start by saying that the consumption-based is a way of charging. It's not a way to deliver the service. You're still, as a service provider of any sort in the digital world, you're still delivering the same services. You're still offering the same capabilities to your end customers, and it is still part of the subscription concept. But you're changing the way that you're charging the customer so that you can actually grow the business and attract more customer. That's basically the main concept, and that's why we see a significant interest and a clear trend in the market doing that. The reason why the consumption-based pricing and consumption-based billing is more attractive is because there is no one-size-fits-all in the business. You cannot really go and define packages that suits everyone's needs. With the way that you bill customers on a monthly basis, take the example of, I come across that every time I travel, and I travel a lot. You go and rent a car and you have two options. You either prepay for the full tank for fuel, or you basically go and try to stop by a gas station and try to fill the gas before you come and deliver back the car. And you're always running behind in time. And what ends up happening is that you don't prepay for the gas, and you come back not having time to fill the gas, and you end up being charged basically a significant amount. So it is not reasonable to prepay the full tank of the gas if you're only driving the car for 20, 30 miles and sometimes 50 miles. So there is no one size that really fits everything. And if you take the example of you're subscribing to, let's say, software license, and you've got 20 users or 100 users, and there's, the provider is going to charge you for the 100 users and most likely for the full year. But sometimes you have 10 active users, and sometimes you actually have 100. So what happens is this is actually creating some reluctance among people to subscribe to services because of the way they are being charged. And we call that fixed or predefined or recurring charge, but it's the quantity of it has been predefined already, and that's creating some barriers for certain customers. These are just examples of why consumption-based billing is more attractive, and it is basically of greater demand in the market today. Just examples. So you're not choosing between subscription versus usage. You're basically giving more options to the user to choose from based on how much they consume. We are engaged, for example, in deploying a system for somebody that tracks number of active sessions, and sometimes is a peak where the number of active sessions is very high, and sometimes there is very slow number of active sessions. So giving that flexibility to the customer attracts basically more customer base, and it's another reason for growth. What you would like to do when you consider that is basically take what you have offered as packages of quantities or pre-purchases of quantities that is consistent for the subscription period, redefine that in the catalog. Take the services that you are offering, see how you can actually turn it into something that is trackable based on consumption or on demand, and then re-offer that to the market and to the customers. That makes it more attractive. When you present your business to customers with that option, consumption-based option, you're basically not overcharging the customer ahead of time, so that sends customers away, and you're not undercharging. You're not leaving money on the table because you want to undercharge so that you can attract more customers. Certain customers will end up using the service much more than others, and basically you're undercharging those customers. So it becomes a much more attractive business transactions between the provider and the customer, because that flexibility of charging the customer based on consumption is much more attractive to customers. It does also accelerate basically customer adoption when the customers notice that you've got flexibility in when you charge that. They will continue to use the service when they need it, regardless of how they grow in the volume and they grow in the quantity, and they can scale down when they don't. So that flexibility actually increases adoption among users, and that means basically revenue growth ultimately to the service provider. When you create flexible packages like this, you will have the option to go and reward customers that actually use it more. So you can come very close to dynamic pricing. You consume more, you pay less for the service, you don't consume as much, you don't have to overpay. That flexibility will, for example, accelerate adoption within a corporate culture, because within the corporate environment. So a business to business, when a business is buying the service, users within the business, more users within the corporate will share the same package. If you have just the example that Igor was sharing earlier, if you pre-purchase for a certain volume, let's say 1,000 licenses or 1,000 concurrent sessions of something, then there are more users within the group that can share that, which means they will continue to grow, which means they will continue to add users. The fact that they feel that they've got the flexibility to reduce that and increase that actually increases the usage and the adoption within the company. And that means, like I said, there's volume discount when you use more. So don't worry about using the platform and the service more, because you will get more discount, and you will be rewarded for your loyalty and for the advanced consumption and the advanced usage. The dynamic pricing is becoming greatly in demand, because you want to give the user the flexibility to select among multiple services. You can have, say, if you're in the software business and you're offering software as a service, and you've got 30 modules and options within the platform that you are offering to your customers, and customers may need 5 at a time, may need some of the packages and some of the software components that you have in your library, but they don't want to prepay for the whole thing. They just use one specific feature for a few days or a few hours, or by certain users and not the others. So you can actually enable all of that, and all the packages. If you have 30 modules within your service offering, let the customer have access basically to all these modules, and you charge them on demand. You charge them as they activate and use the service, and for a specific period of time. And say somebody has rented a drone with a camera, and then you're charging them for the drone, but there is extra fees for the camera that's on the drone. You can only charge them for the camera as they turn the camera on. The fact that you give your customers this flexibility on consumption based, I think you're encouraging more usage of the service, and you're encouraging growth within the use of services. When you make that available, then you get access to different market segments, a segment of markets that were reluctant to buy because they do not want to pay the upfront of subscription, or they do not want to pre-purchase certain services because they only use them for part of the time. You automatically open more markets that you didn't have access to before, and you also open it to a bigger audience and bigger customer base. Again, those that are reluctant, as an example, that are reluctant to prepay for the service because they don't feel they need it all the time, or those that want to use more volume for a specific period of time, but they're reluctant to make the commitment. So that is a flexibility and an opportunity to grow the market and grow the revenue. The last point is the fact that you're giving customers that flexibility, and you end up giving them that self-management and self-control. Everything I said actually speaks to choosing the right platform that enables subscription plus consumption-based billing plus all aspects of these examples of complexity of usages and complexity of consumption. The fact that you give customer the self-management to that actually encourages growth and encourages more customers to use the service. Next slide. These are examples of the complexities. I believe Igor did put some examples of what that is, but when you look at that, you want to go for a platform that does handle this complexity, but at the same time, it does not make it very difficult to manage this complexity. So you manage it. You want to manage the complexity, but you want to simplify that. These are examples of what kind of complexities and what kind of options within the consumption space that you can actually look at and choose from. You can start with a simple scenario, just you consume 100, you will be charged for 100 times 10 cents, and that's basically what it is. But you can go and increase that. You can make it recurring, you can make it volume based, you can make it on demand, you can make it tied to a specific time, you can make it tied to peak, off peak, you can tie it to rules, you can make it related to the quality of service or the type of service or the type of content that is being used. You can have all these flexibility as you are defining your services. It means you're not leaving money on the table, so that you're not undercharging, and it also means you're not overcharging. So it's attractive and it's a fair balance between the provider and the customer. When you have this flexibility and all these options, then that means you can handle complex scenarios that your end customers would be asking of you to, and you will be able to offer that. These are just examples of what complex charging and complex consumption can handle. When you take the same challenges and look on the billing side, because that adds complexity. Sometimes you want to do it on the fly, sometimes you want to do it real time. There are tax complications for doing something like this. There are globalization complications when you do something like that, especially if you operate in multiple countries. There are complications when or difficulties when you have a channel, so that you've got resellers and you've got commissions and you've got payback to these the channel that you are using. So empowering all of that, enabling all of that, actually being able to manage these complexities and simplifying the business offering will actually attract more customers to you and give your business the opportunity to grow. Next. So when you're dealing with all of that, I think every one of these points Igor has touched on in the talking about the why. There are challenges with dealing with data, because now you're tracking that consumption, and the tracking can come from multiple sources, and the tracking can come from multiple formats or in multiple formats. And sometimes you're getting part of the data from one source and another part of the data coming from a different source. And sometimes you have to reconcile, and sometimes you have to wait for data to come from one source until you're actually able to process it. There are dependencies, there are complexities in dealing with these data. It is tied to the mediation. The next slide will show us examples of how multiple sources and multiple data needs to be fed so that you can actually handle these complex scenarios. You will load the data from when you're processing rating, and you're processing consumption-based I think there is a disconnect between the slide that you have on and the topic that I'm trying. If you can go to slide 11, please. So when you're processing, you will see that there are many sources that you have to collect data from, so that you can process the consumption-based charging for the customers. You need the customer information, you need the catalog information, the type of service, you need details about the contract that you have between you and the customer, you need details about the service that you have delivered or the service that the customer consumed. There are information that could feed into this process from third-party applications or other platforms that you have to encompass in the process of charging and giving and applying fees to that service. There is the actual consumption or usage of the service. Sometimes you're tracking licenses, so there's entitlement management and user management. There are basically licenses that you have to track. Which user, on what platform, is it authentic? Is that the right user? Is the user authorized to access this service? All these data points usually is part of managing the consumption-based process, and you want to really have a system that knows how to deal with all these data sources and be able to process it and feed it into the actual order to billing and order to charging process, the entire process. And we will talk about the impact of that on the integration and on the automation. The next slide. When you're thinking about implementing a full system to help you address the consumption-based billing and to help your customers benefit from that, you really have to think about the end-to-end process. It isn't just one component in the middle of the solution that you can use, which is just the rating of consumption-based services. You have to think of the entire process. The entire end-to-end process basically needs to be automated and needs to be enabled. And when you're implementing that, you really need to think of it from end to end. From the CRM, when you actually have the opportunity in your CRM and you're tracking it and you're providing the quote to the customer, to creating the order, to activating the order, to activating the service, to provisioning the service, to controlling that within the terms of the contract between you and the customer, to basically receiving the consumption data that you will then want to use to apply the charges, to billing the customer correctly, to generating the finance files that will be imported into ERP without creating or enabling a platform that takes this process from end to end and make sure it is automated and make sure it is interconnected and make sure there's no human intervention, because every time you get humans to work on the data manually, this is room for error, and this is basically the enemy of scalability. If people or human resources are processing this one and trying to advance the service or advance the process from one step to the other, this is just the enemy of scalability, and you won't be able to scale the business and you want to be able to handle large volumes. So automating the end-to-end process and thinking of the solution for the entire process is an important step in the journey of adopting consumption-based billing. Next slide. So when you implement this entire process, you will see that the system that you will choose will have to interact with a lot of data sources, a lot of data type, and multiple platforms within the organization and outside the organization, financial related, service related, contract related, consumption related, task related, CPQ. Sometimes you've got an external tool, CRM, ERP on one side, ticketing, task management, help desk. These are all components that you have to think about basically when you are implementing this process. And the only way that you can make this successful is actually by having the ability to automatically integrate with these third-party platforms or data sources. Again, any manual exchange of data or manual loading of data is going to be the enemy of scalability and the enemy of efficiency, and naturally that is going to eat up from your profitability and prevent your business growth. So when you want to think about automation for that end-to-end process, you have to think that integration must be present so that you can have all these components and all these data sources talk to each other automatically. The next slide. Igor emphasized on the mediation. It is actually a just about loading the consumption file and pushing it so that the rating engine applies just a simple multiplier. The process of loading this data, manipulating the data, extracting the billable data. Sometimes there are multiple events that could be billable events that could be extracted from one single record or multiple sources, like I said. So being able to handle that and being able to have a powerful mediation tool in the middle of the process is critical to the success of the consumption-based billing and to the success of you as a service provider being able to deliver the service on consumption basis. Next slide. So now you've got the charges, you've sent it out, you have to deal with the revenue. It isn't the process of money management and the process of revenue management does not stop with the generation of the invoice. You'll generate the invoice, you'll send the invoice to the customer, and you'll collect the payment from the customer. But now you have to take this financial and accounting data and send it to the ERP, and there are many challenges associated with that. You definitely want a dashboard in the system that actually shows you what's going on. What products are selling? What are you selling? Where is the growth areas? Which sectors of the market? What type of customers? What type of services? Which ones is generating more margin? How do I take this financial data and actually offer it to the ERP system or to the accounting system in a format that the accounting system will understand? We're talking, for those that are in the finance and accounting language, we're talking about a powerful GL interface structure so that you can actually take the chart of account that you have in your ERP system and apply that as part of the configuration in the billing system, so that every financial transaction that you have in the billing system will actually map to a specific entry point or in the chart of account or in the GL structure that you have in your ERP. Otherwise, you'll end up with a lot of manual processing. You'll import the data as an invoice, and then you have to manually allocate the invoice to a specific customer or map the invoice to a specific sales order, or do all of these steps manually on the billing, on the ERP platform, when you could actually map this data on the billing system and have this integration and synchronization between the two systems to happen automatically. There is financial analysis that you need to do on the profitability of every item, which is basically talking about the margin that you have at the granular level. On the next slide, we can talk about that. If you rely on the accounting system to tell you, or the ERP system to tell you your profitability, most of these ERP systems will tell you how much money, all of them will tell you how much money you made in a month. Some of them will tell you how much money you made on some product sector, basically, or a service type, or maybe some channel or some customer. but it is very difficult. And then actually the feedback that we collect from many of our customers is that it takes them a lot of manual work to actually identify the margin that they have made on every product that they have sold. That becomes a very time-consuming exercise, because you're basically feeding a lot of spreadsheets to your accountants and financial staff members to do this kind of analysis manually. Whereas in powerful systems and well-equipped systems, you will be able to track cost along with the revenue at the granular level, at every product for every customer. And needless to say that BluLogix platform will actually offer that. So when you generate the invoice in the system will automatically generate the applicable cost for every single item and every invoice for every customer that you actually generate the invoice for. So you know your margin, you know your profitability on every product, in every sector, in every period, for every customer and for every product that you have sold, so that you can emphasize on the products that actually generate more revenue, or you could fix the revenue leaks that you have because the price was wrongly calculated on some service, or you're missing basically some revenue opportunities because you didn't have granular details. So knowing and having live access to profitability information and to margin is critical to the success and the healthiness of the business that you are running. The last point that I want to talk about in the finance is the ability to track revenue recognition. Most ERP systems will provide revenue recognition as part of their system. A lot of times, to actually get accurate revenue recognition, you have to do a lot of configuration on the ERP side, and some configuration and a lot of configuration on the billing system. There are some manual steps that you have to do so that you can get the revenue recognition to work on the ERP side. We've empowered revenue recognition capability within the billing platform that we have, and that basically allows the system to read any information or attribute related to GAAP standard, basically of revenue recognition, so that if the product is billed for a year, you don't have to define that this product has to amortize over a year, because it's already defined in the catalog, and you know that the money you've collected and the money that you have invoiced, the charges you have invoiced the customer, has to basically be recognized over a period of 12 months. So the system will automatically does the GL recognition transactions to recognize the revenue from deferred revenue to current revenue, because the data is already in the system. That's just an example. So being able to manage that without extensive manual work and extensive configuration that you have to do on both systems will simply just help you manage the revenue in the business more effectively. That was the last slide. I'll give it back to you, Inga, to see if we have any question that we can take from the audience.
All right, and thank you so much, Yusuf, and thank you to MGI for the great information about the whys of usage-based billing. We are actually going to, given that we are over time at this point, not have any time to answer questions right now, but please be assured, if you, for those of you who have submitted questions, we'll reach out to you directly to get those answers to you. And as I mentioned, we'll be forwarding on this recording to you, and given the technical difficulties, a cleaned up version of it, if you will. But thank you very much to all for sticking with us through this webinar with the difficulties and all. And we look forward to seeing you at our next webinar. And thank you very much.